Hello, everyone, and welcome to GreenTalk, our new podcast on sustainability.
Martin and I are very pleased to welcome Luis Reyes Ortiz today to talk about sustainable finance. Luis, you're a professor at Kedge Business School in Finance and Economics, and you are the head of the Master of Sustainable Finance. So, Luis, thank you very much for being with us today.
You're welcome. Thank you for the invitation.
First, for our editors that are not all familiar with sustainable finance, could you explain what sustainable finance is?
Yes, so the textbook definition, I say textbook, I have to quote myself here. There is no textbook in sustainable finance as such, but the most accepted definition would be that of the European Commission, which is also adopted by the World Bank. So according to them, sustainable finance is the process of taking due account of environmental, social, and governance considerations when making investment decisions in the financial sector. So this is meant to lead to increased longer-term investments into sustainable economic activities and projects. So this definition has a connotation, basically that it first promotes the ESG criteria, which is the benchmark for classifying the level of engagement of certain companies. And this classification is also useful for several reasons, which we can talk about later on. The second thing is that it talks about longer term investments. The norm up to here, because of volatility in the financial markets in general since the 1980s, the norm has been that short-term projects have been favored in for funding. So basically, when a company wants to lend money, it will prefer to do so on a short-term basis, so that they can renegotiate the contract on the basis of what they require for profitability. So sustainable finance looks at a longer term, and it, of course, requires more stability. Just a last very quick note on that.
Yeah.
The definitions vary according to the, let's say, the organization, the institution that takes this, makes this definition or adapts this definition. For instance, the People's Bank of China, the central bank in this country, excludes the public sector financing. It takes a more corporate approach, and there is no fiscal policy tools in their definition, and it also omits climate or biodiversity related issues. The government of Germany, for instance, has a little bit more of an encompassing definition, but it's also broad and vague. Biodiversity and mitigation of climate change are excluded as well, and so on. So it depends on the sector, but broadly speaking, the European Commission's definition is the most accepted one.
Yeah, very clear. And could you explain to us what is your academic and professional background? Maybe explain to us all at the same time how you got interested in sustainable finance.
Yes. To answer, the short answer is I got here by chance. It was a coincidence, I would say, but I am an economist. I am a trained macroeconomist, to be more specific, and I have been working on empirical models, country models. So one of the models that I built is actually for France, and the French economy is both interesting and there's plenty of data we can play around with. So I got into macroeconomics from the empirical side, and this is what I actually do in terms of research, focused more on international finance and also on macroeconomics in general. Now, how did I get into sustainable finance? Well, there's two reasons. One of them is I have a previous experience. I used to work at the Agence Française de Développement, so the French development agency, as a modeler. And the purpose of these models that we were building for partner countries was actually to study the interaction between climate and the economy in both senses. So how climate affects the economy and the other way around. So that was one point of entry into this field. And the second reason why I am now into sustainable finance is because I was asked to direct the program here at Kedge 2 years ago. Several reasons lead to that. My predecessor, who is an expert in the program and with whom I still work, who still works in the program, we work together on this. He asked me to take over the program, largely because he wants to do research and because he's in Marseille. So I live in Paris, and these are two reasons, maybe not the only ones. But now I am getting more and more familiar with the field, of course, as I deal with experts, both from the professional side and the academic side. So the partner companies that we work with, they are both feeding us in terms of content, but also we feed them with the expertise that we create in the program so that they can work with them.
So previously you mentioned the ESG criteria. Could you explain how they're used in sustainable finance?
Right. So ESG criteria, they stand for environmental, social, and governance. I'm not sure governance was a word in English before this came into force. Actually, the governance part might have been adapted from European English. So governance relates to basically how the firm governs itself in terms of the relationship between, let's say, the head and the rest of the company. So governance relates today mostly with respect the criteria to look at is corruption, for instance, if there's corruption, one or different forms of corruption in the company, and social criteria, they relate to inequalities between, let's say, men and women, equal pay, discrimination if there are minorities who are affected by some kind of policy, and so on. And of course, the most important one, at least nowadays, is environmental, which I started backwards for a reason. So environmental has been an increasingly important subject for at least 30 years, I would say. Since the 1980s, there have been several international events, one of them being the Conference of the Parties, both on climate and the other one on biodiversity, that have been getting more and more attention. I would say that perhaps the most important date for this to be taken seriously is naturally the COP21 in Paris. But this is not new. This was not new then. It was long standing. The IPCC, which is called GIEC in French, got a Nobel Prize together with a presidential candidate in the US in the early 2000s. And so this is not new. Now, how are these ESG criteria used? Firms get evaluated by rating agencies. So it could be Vigeo Eiris, or it could be Moody's, or PIMCO, or whatever, other JP Morgan, and so on. So these rating agencies, they rate, they basically build tests for the companies, and they judge whether they pass the test or not. And they give them a score. So these scores, based on these three criteria, are actually can be the difference between getting funding or not. So some firms can get more funding if they, to the eyes of financiers, they are more responsible than others who are not. Now, this leads to problem of where we set the bar. So if the exam is too easy, of course, everybody gets funding. If the exam is too hard, then many would be excluded, and this can also be an issue. So there's a leveling issue as well.
Okay, thank you. And how would you say that the financial sector evolved with the environmental issues that appear in the last years and decades, and with such big events as the COP21 in Paris?
So I have the impression, and it's only a personal view, that there has been, since the Paris Agreement, there has been more regulations, but also more vulnerabilities. in the financial sphere. So first, let's focus on the positive. So regulations, they have been more and more ambitious. They have been becoming increasingly ambitious. This can only be good in the sense of when investments get to be more controlled of what the financial sector is funding. And if these regulations are well calibrated, then this can only be good in the sense of good projects get funding, bad projects don't, to put it simply. So regulations like the EU taxonomy the EU taxonomy is actually not a regulation itself, but it is the basis of a regulation based on the taxonomy. And this taxonomy is actually describing what is and what is not considered sustainable. So the so-called does not do not significant harm is very important in the jargon of the classification of what is and what is not responsible. So all this, what is included or not in this set of activities that do not do harm in the environment, it's so far it has become, broadly speaking, more demanding. Some controversial issues have also emerged, and so gas is one of them, and it might not be unrelated to current events in Ukraine, for instance, but well, that's another story. Now, that's on the side of regulation. On the side of vulnerabilities, so there is, since it is becoming a fashion, hopefully not a fad, there is more and more institutions, people, groups, companies that want to be part of the movement. Sometimes just superficially because it's a fashion. Sometimes it can be difficult to distinguish the movements that are legitimate, who have legitimate interest in mitigating climate change or mitigating the devastation of the biodiversity in general. So from this other group that are only interested or mainly interested in getting more attention on their own and getting a promotion or whatever. So of course there is more and more experts, including myself somehow, but I don't consider myself an expert, not at this point at least. So there's more and more people talking about these issues, and there is no consensus of what the actual line of attack should be. For some people, for instance, in sustainable finance should be about financing the transition, meaning mainly renewables, renewable energies, solar panels, windmills, biomass-based energies, and so on. For some others, the transition also implies financing nuclear nuclear-based energy, or let's say even some fossil fuels in the transition. So there is no consensus, and there is so the vulnerabilities that I was speaking of, they also build on these differences. So vulnerability in the sense of it is just a fashion somehow, and vulnerability also in terms of storytelling, that there's no common ground.
Okay, thank you. So you said that the financial sector definitely evolved. Do you also see a trend in sustainable investing in the last few years, and what does it exactly represent compared to other non-sustainable investments?
As I said before, there has been a lot more initiatives than in the past, despite the interest in the environmental issue since more than 2 decades ago at least. But since 2015, there have been more and more initiatives, and these go in the direction of what I mentioned before, the very simple idea of financing responsible projects and non-financing unresponsible or irresponsible projects. So the trends in general, they come both from the private sector and the public sector. So on the private sector, there has been more interest by financial companies, asset managers, for instance, to exclude certain activities from their funding. When it comes to banks, they also have adhered more and more to regulations Some of these regulations come from private organizations, like the Loan Market Association, which is a private association based in London. And these, the recommendation by the LMA, they go in the sense of promoting responsible investments. Of course, they have their own definition of responsibility. So that's one thing. These proposals, they just came out this year, but they have been discussed since at least 2 or 3 years. Now, this is perhaps the latest, but other markets have been well developed since at least the Paris Agreement, or even before, green bonds. So there is the market for green bonds that we can talk about later on. But these green bonds have been there before the Paris Agreement. They are still developing today, and there is now a whole classification of thematic bonds. So the numbers by the IMF are very telling from the last Global Economic Outlook, I think, 2022 in October. There is a whole section about the size of green bonds in total bonds, and it has at least quadrupled compared to the previous year, and the trend has been increasing. So that's on the private sector side. Now, public policy has also evolved, and it has become, it has evolved, although it could have been more ambitious, of course. So when it comes to policy, there is, for instance, carrots and sticks that you can use in order to promote sustainable development. Now, the stick approach would be, for instance, a carbon tax. The carbon tax is basically raising the cost of, let's say, fossil fuels, let's say the ton of carbon, a liter of, let's say, oil, and or other, let's say, fossil fuels, or non-so-responsible fuels. So you raise the tax on this, and the government gets funding, and of course, this can be reinvested into responsible sectors. And of course, at the same time, it is discouraging this type of investments. So that's the stick. The Inflation Reduction Act, which was just signed last year in the US, is not taking this approach. The Inflation Reduction Act, which is about inflation as such, but it is more about the environment that we may think of, does not take the stick approach. It takes actually the carrot approach. That is to say, providing subsidies. So you do not punish the polluters, you actually just compensate, you actually give a price to the responsible investors. So subsidies is the carrot approach. And for some observers, I would say this is like killing the stick approach or the carbon tax. So the trends are, in general, very, very, to go back to the initial question, the trends are such that sustainable finance is not only, I would say, a temporary issue. I think it's here to stay. I think that's the clear message from the private and the public sector and the international organizations. But it has been adapting also, like for instance, COVID. So the pandemic brought down prices. They rose up again in 2021. And it is the Inflation Reduction Act is, of course, a consequence of the pandemic, but it has also an environmental side to it.
Thank you very much. And now for our auditors that are interested in working in this field, what are the different job positions that are related to sustainable finance?
Yeah, so there are some, when we think of the financial sector, the typical job that everybody thinks of is a financial analyst, to look at financial indicators like the interest rate, like equity prices, portfolios. There's a lot of numbers, and NASDAQ is going up, NASDAQ is going down, this is going up, this is going down, and not many people understand that. No problem. So it's a niche, for experts and all that. So that's a regular financial analyst job. In contrast, the cliche, I would say, job in sustainable finance is extra financial analysis. So basically, in extra financial analysis, what people do is to look at extra financial data or informations in general that go in the sense of looking at the factors that can affect profitability for a firm, but that are not necessarily financial. So basically, when the ESG criteria. So when a firm looks at the interest rate going up, they know that their debt is going to go up. So that's the job of the financial analyst. The extra financial analyst knows that if the company gets a bad rating with respect to social governance or environmental issues, they know that funding is going to be more expensive to get. So what they have to do is actually to look at the trends of these regulations, how high or low the bar is, but they also have to look at the behavior of their firm, how they adapt. If they want to tackle the issue or just communicate about it, that's another issue. If they want to communicate and do something, that's better. So that they keep on getting funding, that's actually the job of the extra financial analyst. So most of the alumni of the Sustainable Finance Program, they work like half of them work as ESG or extra financial analysts, either in the consulting sector, in auditing, or in financial companies like regular analysts. So that's what half of the people at least in our program do. The other half, they have other jobs, which are more or less popular depending on the time. Some jobs are, for instance, trading in the energy sector. So they look at the trends not of conventional fossil fuels. Let's say you look at the price of oil, it goes up. That means that other currencies like the dollar is going to go down, and then they do some tradings based on that. What energy traders do is actually to look at the price of, let's say, biomass, or look at the price of solar panels. They look at the trends in coal prices, and they contrast this with other hydrogen supply that is actually increasing. And so they trade in order to boost the market for renewables. So that's another one. A related job, I would say, is biodiversity analyst. So basically what they do is look at the biodiversity from the angle of the market. So if there is more and more news, which are also important when you look at finance in general, whether these news are exaggerated or not, that's another story. So when the news about biodiversity are bad in a given country, let's say Brazil, which is not defending the Amazonian river or the life of the natives or whatever, when there's bad publicity for this country, of course, the biodiversity consultant is going to tell the company, well, you know what? If you have assets in this country, you better take them out and we have to go somewhere else. So they have to first look at the indicators that lead to the unprofitability in a country like Brazil, but they have to look at the alternatives elsewhere and if they can be or not profitable in the long term. So I just mentioned three. There's some room in between the three, and there's others. So I just give you like the most, I would say, popular ones, and that are very, very sustainable finance related.
Okay, and would you have any recommendations for those students who are aiming for such positions?
Yes, there are more and more programs which are specialized in sustainable development or sustainable development related areas. Many of them are Kedge. So some of them are the Sustainable Finance Program, the Business Transformation for Sustainability. There are others like supply chain. There's other programs that are related, even marketing. How do you brand something that is actually goes in the direction of sustainability and so on. So there is more and more offer, especially in France, I would say. I think the market is booming here. I'm pretty sure that in other countries, mainly in Anglo-Saxon countries, the supply is not going to run short in the next few years. But so far, so my advice is that. So if you want to specialize in sustainable development, no matter if it is from the financial side or not, there is plenty of opportunities in Europe mainly, but this will keep on increasing. And my second advice is, even if this supply is increasing in terms of the school sector, I would say on the other side of the barrier, there's the professional the companies that hire these professionals. And my advice would be, if you are somehow involved in a greenwashing, some form of greenwashing in your company, well, the stupidest thing would be to tell them to your boss and to challenge them, right? So my advice to you would be to try to change things, but be smart about it. Try to make a change that goes in the right direction, which is what sustainable finance is about. Greenwashing is not one of them. Greenwashing is about making the company look good, but it's not legitimate effort. So that would be my advice. And we are all concerned about that. We just have to choose our fights, whether they are from within or from outside of the system. And we have to be very careful in how we communicate. So that would be my two advice. So prepare and be honest.
Thank you very much, Luis, for all these very interesting insights.
Very interesting for our audience.
Yeah.
Thank you again for this. I think it will inspire many of them.
Thank you very much for listening. So now you can find our bonus where Luis talks about companies' interest to be sustainable, green bonds, and worldwide regulations encouraging sustainable finance.
On our side, we invite you to join us in 2 weeks for the next episode of GreenTalk, where we will discuss the topic of NGOs with our guest Panut, founder and director of OIC, an organization working to protect orangutans in Indonesia. Remember to take care of yourselves and our planet, and see you soon.